There's a 15-second decision that destroyed $600 billion, yet almost no one talks about it. And this same psychological mistake is quietly draining your wealth without you even realizing it. It took down Lehman Brothers, ended Dick Fuld's $500 million career, and triggered the 2008 crash because he believed one fatal lie. And by the end of this video, you'll know the exact mental trap he fell into and how to protect yourself from making the same $600 billion mistake. This will only take 10 minutes, but it might save you from decades of bad financial decisions. Because I'm about to show you how one mindset mistake brought down the global economy and how you might be falling for the same trap today. It starts with a 15-second phone call, September 2008. Dick Fuld sits atop Lehman Brothers, a titan of Wall Street, worth over $500 million. One call, one decision, and it all collapses. But this wasn't a normal business mistake. It was a psychological blind spot, something psychologists call the winner's curse. If you've ever held onto a bad trade too long or chased a sure thing you didn't want to miss, this story is your warning and your solution. If this kind of analysis is what you've been missing, consider this your invitation. Welcome to the Wealth Project, where ambition meets opportunity and your journey to wealth and luxury living truly begins. Here, we deconstruct the playbooks of the world's most successful, so you can transform your future. If you're ready to elevate your life, subscribe, follow, and ring the bell so you never miss a masterclass. Welcome to the exclusive club where you don't just watch, you learn to win. Your next lesson starts now. The gorillas rise. First, you need to understand how Dick Fuld became so dangerous, because his greatest strength became his greatest weakness. To understand how one man crashed the world, you need to understand Dick Fuld's psychology. They called him the gorilla on Wall Street, not because he was big, but because he was ruthless. He once said he wanted to rip the hearts out of his competitors. Fuld joined Lehman in 1969 as nobody special, just another guy in a suit. But he had something different, an obsession with winning. When the 1987 stock market crashed, other firms panicked. Fuld doubled down. When the dot-com bubble burst in 2000, competitors retreated. Fuld pushed forward. When long-term capital management collapsed in 1998, threatening the entire financial system, Fuld not only survived, he thrived. Each victory fed his ego. Each success made him more confident. Each crisis he survived convinced him he was untouchable. This is what psychologists call survivorship bias, when past success blinds you to future risks. But here's where Fuld's winning streak became a trap. Because by 2008, his greatest asset, his confidence, had become his greatest liability, and the warning signs were everywhere. The ticking time bomb. Now you understand why Fuld felt invincible. But what you're about to see is how the invincibility complex created a financial time bomb. By summer 2008, Lehman was in serious trouble. The company had borrowed $30 for every dollar it actually owned. Think about that. If you had $1,000 in your bank account, you'd owe $30,000. Most of the money was tied up in toxic real estate deals that were now worthless. But Fuld had seen this move before. In March 2008, Bear Stearns collapsed. The government stepped in and arranged a rescue. Bear Stearns got sold for $10 per share. It was embarrassing, but the company survived. Fuld was convinced the same thing would happen to him. The first warning came in August. The Korea Development Bank, one of the most powerful financial institutions in Asia, wanted to buy 25% of Lehman. They offered to inject billions in cash and restore confidence. The Koreans offered around $1.50 per share based on book value. Fuld wanted $17.50. He thought they were trying to steal his company. On September 9th, the Koreans walked away. Lehman's stock crashed 45% in a single day. The market was sending a clear message: make a deal or die. But Fuld still didn't listen. And that's when the most powerful people in finance gathered for one desperate weekend. What happened next would change everything. The weekend of doom. So now you see how Fuld's pride was already costing him billions. But the real test was coming, because this is where psychology meets reality. Friday, September 12th, As markets closed, emergency meetings began at the Federal Reserve Building in New York. Picture this: the most powerful people in finance gathered in one room. Treasury Secretary Hank Paulson, Fed Chairman Ben Bernanke, the CEOs of every major bank. Their mission? Save Lehman Brothers before Monday morning, when Asian markets would open and panic could spread worldwide. Two potential buyers emerged: Bank of America and Barclays, a British bank. Both wanted the same thing the government gave Bear Stearns: a guarantee that taxpayers would absorb Lehman's toxic assets. But Paulson had made a decision: no more bailouts, no more moral hazard. If Lehman wanted to survive, someone else would have to pay. Saturday morning, Bank of America walked away. They announced they were buying Merrill Lynch instead. One potential savior down. Sunday afternoon, Barclays was still interested, but only in Lehman's good assets. Their offer valued the viable parts of the business at roughly $2 per share. Everything else would be left to die. To most people, $2 per share sounds terrible. But remember, Lehman stock had closed Friday at $3.65. The offer wasn't that far off. More importantly, it would save 25,000 jobs and prevent a global meltdown. But to Dick Fuld, $2 per share wasn't just a bad deal, it was a personal insult. And that's when he made the decision that would destroy everything. The psychology behind this choice is something you need to understand. The fatal psychology. Now you understand the situation Fuld faced. But what happened next reveals the most dangerous psychological trap in finance, one that might be affecting your decisions right now. Here's what makes this story so terrifying. Dick Fuld wasn't stupid. He wasn't evil. He was successful, really successful. For 39 years, his instincts had been right. His aggressive style had worked. His refusal to back down had made him rich. But success can be dangerous. It creates something psychologists call overconfidence bias. The more you win, the more you think you're special. That normal rules don't apply to you. Fuld had confused his personal worth with his company's value. Any deal that valued Lehman too low wasn't just bad business to him. It was a personal attack on his legacy, his reputation, his identity. This is the same psychological trap that destroys individual investors every day. You buy a stock at $50, it drops to $30. Instead of cutting your losses, you hold on because selling would mean admitting you were wrong. Your ego becomes more important than your money. Sunday night, September 14th, the Barclays deal was falling apart. British regulators wanted the same government guarantee that Paulson had already refused to give. At 11:47 p.m., Dick Fuld's phone rang. On the other end was Treasury Secretary Hank Paulson. The conversation lasted less than 15 seconds. "There will be no government rescue," Paulson said. "You're on your own." Fuld had been bluffing. He thought the government needed him more than he needed them. He was wrong, and what happened next shows you the exact price of pride. The price of pride. So now you've seen the psychological trap that caught Fuld. But here's the shocking math that shows you exactly what pride costs. Let me show you exactly what Fuld's ego cost him. This is what I call the price of pride. On one side, the final offer on the table that weekend. Barclays was willing to pay roughly $2 per share for Lehman's viable assets. For a company with 158 years of history, that meant saving thousands of jobs and preventing global chaos. On the other side, the value of that same company 48 hours later, $0, 0 cents. Fuld held out for a better deal. He got nothing. And trying to save his pride, he lost everything: his company, his fortune, his legacy. But here's a lesson for your own finances. How many times have you held on to a losing investment because selling would mean admitting you were wrong? How many times have you refused to take a small profit because it didn't feel like enough? This is the same psychology that makes people hold on to losing stocks until they're worthless. The same pride that makes entrepreneurs refuse reasonable buyout offers and end up with nothing. But the real tragedy wasn't what happened to Dick Fuld. It was what happened to everyone else. Because when you're playing with other people's money, your psychology becomes everyone's problem. The global meltdown. Now you understand the personal cost of Fuld's decision. But what you're about to see is how one man's pride destroyed millions of lives. Monday, September 15th, 2008, 4 a.m. Lehman Brothers filed for bankruptcy. The largest corporate failure in American history. When markets opened, chaos erupted. The Dow Jones crashed 504 points, the biggest drop since 9/11. But that was just the beginning. Within hours, a major money market fund collapsed because it owned Lehman debt. Credit markets froze worldwide. Banks stopped lending to each other. Nobody knew who was safe anymore. AIG, the insurance giant, needed an $85 billion bailout the next day. Washington Mutual collapsed. Wachovia nearly died. The entire global financial system was on life support. But let me make this personal for you. Unemployment soared from 6% to 10%. That meant 15 million Americans suddenly had no paycheck. Families lost their retirement savings. College funds disappeared. Small businesses shuttered across the Midwest. All because one man couldn't swallow his pride. And here's the most incredible part. Fuld still doesn't think it was his fault. What happened to him after Lehman died reveals the final lesson about the psychology of failure. The aftermath and mirror moment. So now you've seen the global destruction Fuld's pride caused. But this final piece will show you how to avoid the same trap in your own life. What happened to Dick Fuld after Lehman died? He lost almost everything. His $500 million fortune evaporated. His reputation was destroyed. He became the face of Wall Street greed and incompetence. But here's the crazy part. He still didn't think it was his fault. In interviews years later, Fuld blamed everyone else. The government, the media, short sellers. He never admitted that his pride killed his company. That's the final tragedy of Dick Fuld. He learned nothing. Even after losing everything, he couldn't see that his own psychology had been his downfall. Now let me turn this story towards you, because the same psychological traps that destroyed Fuld are probably affecting your financial decisions right now. And that brings us to the most important question. How do you avoid becoming the next Dick Fuld? The answer lies in understanding 3 specific lessons from his downfall. The lessons for you. So what was the 15-second mistake? It was ego disguised as strategy. The belief that past wins guarantee future success. And that pride is worth more than reality. Dick Fuld didn't lose Lehman Brothers because he was dumb. He lost it because he refused a $2 per share deal that could have saved his empire. Instead, he waited and got $0. And you might be doing the same, holding on to losing stocks, ignoring stop losses, rejecting gains because they don't feel big enough. That's the winner's curse. That's overconfidence bias. And it's costing you more than you know. But here's what I didn't tell you. Fuld wasn't alone. This psychological trap has destroyed other billionaires, tech giants, and hedge fund legends. Each story reveals another blind spot in the psychology of money. And the most dangerous part? The smarter you are, the more vulnerable you become. The downfall of Dick Fuld is just one chapter in the larger book of financial delusion. To continue your journey, click here for the next psychological trap that's taken down billionaires and still blinds everyday investors. Luxury, freedom, and success are closer than you think. Don't just watch, take your next step. Choose our latest insights or a curated favorite, both waiting for you on your screen. This is The Wealth Project, deconstructing wealth, transforming your future. Subscribe, get the rulebook, and remember, you're now part of the exclusive club, playing to win.